Hi, Kristen Cooper here. Thanks again for watching. Today we are going to talk about how does your credit impact you? What are the impacts of credit? Now, there's a broad spectrum of this, but it really comes down to the basic. Credit is going to determine your credit worthiness. So whatever it is that you need credit for, the reason that they're asking for this is to determine how credit worthy you are. And what that means is, what is the likelihood that you're going to repay the debt, take care of the asset, whatever it is that you are pulling credit for. And so it is a big impact based on what you're trying to do and depending on what you're using the credit for. Now, you could be using the credit just to move into a residence where you're going to be renting. You could be using credit to get a student loan, an auto loan, a mortgage. So there's many facets that you need a credit report. And each creditor or facet will determine different credit worthiness standards for their institution. But we will talk about a couple different impacts that there are. The first one is going to be, typically you're going to pull credit to determine if you can get a loan or financing for something, whether that be a credit card, an auto loan, a mortgage. You're trying to obtain financing. Now, dependent upon what your credit scores are and the likelihood that you're going to repay that is less risk. Less risk means that you get better terms for the financing that you're looking for. So it's going to have an impact to your interest rate or your terms of the loan. Could mean that you're going to get if you have bad scores, you could be getting a higher interest rate and a lower term that they are requiring that you pay it off sooner. It could be an impact for an approval. So if you're doing it to get into a residence where you're going to be renting, it may not have an impact to the rate or how much you're going to pay for the home, but it may have an impact whether you get approved for the home or not. And it's going to have some impacts on programs. So the better your credit score, the more programs start to open up. You know, it's kind of one of those you build upon to build upon. So as you climb the ladder to success, more doors open up. It's the same idea with your credit. As your credit continues to improve, more programs open up. And so what that means at the end of the day is the lower your scores, the bigger impact it's going to have to your overall financial net worth. Because if you're paying more for the same loan than somebody else's, that means that you're depleting your net worth and your assets more than the other person is. And ultimately what we're trying to do is maintain a solid foundation, grow upon that foundation, and find every strategy, tool, and facet that we can to save the money that we have and only spend money on things that are going to grow us, that are going to build us deeper, or that we're going to enjoy. And so wasting is what I would call wasting that money when you could be saving that money and paying the less amount by building your credit. It just doesn't make sense. There's so many steps that you can take to build your credit, and I know that it can be frustrating and it can take a good amount of time in order to do it, but that's why we have great company and resources out there to help get you through it. Now, it may be a small cost that you pay now in order to branch out and build your credit scores up, but the amount that you're going to save on the future purchases that you make is so much more. The value is definitely there. And I know it's hard to make that initial investment and take that first step, but understanding that that factor of your credit score and the impact that it has is huge. You know, that's the accumulation of somebody that's making it and somebody that's thriving. And so we really want to get back to the basics of understanding that credit is your baseline. Getting your credit established so that you could build upon that in every facet should be your main focus if your credit score is not where it should be. Now, breathe. Take it in. Credit is not the only impact or facet there is or component that there is when you're obtaining financing. So if you don't have a perfect credit score right now, it doesn't mean that you can't obtain the things that you're trying to obtain. There's different factors. When you're getting a loan, they're going to look at your loan to value, meaning do you have money to invest into this purchase? The more money that you have invested, the less that risk factor is. Because if you're invested into something, the likelihood that you're going to walk away, very slim. The likelihood that you could sell it, make profit because you have that equity position, whether it be in an auto loan or a home, is great. So if you have money to invest, even though you're working on your credit score, that can mitigate some of the key components of the negative impacts from the credit. Also, you want to look at your stability of employment and income. You know, depending on the type of lending that you get, whether you're looking at a credit card or auto loan, things like that, typically they're still going to look at it to your history. And if they see that you've been solid in your career and that your trajectory of income is continuing to rise, that's a very good key component that they're going to be looking at as well. So although it may seem like there's so much around credit, and there's other factors that take into consideration to see your eligibility. Same with your debt to income ratio. Maybe your credit score is not too good. And I've had this. I've past clients that had bad credit and they just refuse to get new credit. And so their credit scores stay low because they're not building up on that credit. But they have plenty of money in the bank. They have good job stability. And so there are some things that we can do to get the credit scores up pretty quickly in those situations. But I want you to know that this is not to make you feel down. It's to make you feel uplifted, to let you know that let's start here at our baseline. Let's climb on our ladder to get our credit. Right now, our focus is credit. Climb up the ladder to success on getting our credit where it needs to be so that we could build upon that foundation. Now, I look forward to giving you more videos and strategies on how to go from here, but keep in mind that if you're looking to purchase a home, get with a mortgage planning specialist such as myself. I'm a certified mortgage planning specialist, so we look at all facets, not just putting you in a loan. And we can help you with the credit plan and the next steps so that you don't feel that you're overwhelmed or too much pressure. If you're not looking to purchase a home, you can always reach out to a credit specialist, a credit repair program. You can reach out to me and I'll put you in contact with a couple that we work with in the area that are very reasonable costs, but they show results. And that's the biggest thing is there's a lot of credit agencies out there that you just can't trust, or you start with them and you're not getting the results and you're getting frustrated. There are good companies out there and we work with them all the time. So if you need that resource, please reach out to me and be more than happy to connect you with them. Until next time.